In this video, I'm going to show you how to properly do top-down analysis from higher time frames to lower time frames. This is the exact process I use before every single trade, and if you master this, you will stop entering random trades forever. First of all, top-down analysis simply means starting from the higher time frame, then stepping down gradually until you reach your entry time frame. And higher time frames give direction, mid time frames give areas, and lower time frame give entries. Most traders reverse this process. They start on 5 minutes. That's why they keep getting stopped out most of the times. On the weekly time frame, I'm looking for entries. I am only identifying market structure, and here we can clearly see higher highs or break of structures of this GBP USD market, where the market is breaking to the higher highs after a change of direction from the lower zone, and we can see the market trying to go to the higher zones. And this alone already removed 50% of bad trades, because now I know I should only look for buy setups. Now what I can see here is that the market is breaking, going to the higher highs. And what else do we look for here? You know very well, in the smart money concept, we always look for three things. Firstly, break of structure or direction of the market, imbalances, and liquidity mostly, and then we can add up with another block. But now, what else do we see here? We can see some liquidity left behind and some imbalance not filled. So those are the first thing that we look at, and we look for our order block that we are waiting for. If we are having our zone around here on a weekly time frame, of course this zone will be a huge zone, and this zone, if we are to take a trade from this zone, it will be taking around 307 pips, which we don't want to risk. Of course, a good trader is the one who knows how to manage risk. Now we can draw this zone, but we have to minimize to the lower time frame so that we can get an entry that has minimized the risk. So follow me well until the end of this video. You will have learned how to do top-down analysis in an easiest way that most people don't understand.
Want to trade like the pros? Join my free Telegram channel where I reveal the actual trades we've taken, the powerful strategies behind them, and the results that speak for themselves. It's also your direct gateway to my exclusive mentorship and VIP program, where traders are leveling up fast. Don't miss this chance to learn, grow, and win. Tap the link in the bio or description to join free today.
Now look at this. We have this order block around here on this zone, and you can see that this zone is a huge zone. So what do? We have to wait for the market to calm down to this zone, and then we look for lower time frame confirmations. But before we do that, what else do we look at? Most of the times we have to look at what we call Fibonacci retracement. So on this time frame, I want to know, is the price expensive or cheap for me to buy? Now, how do we look at that? First of all, that's when I'll pull up my Fibonacci retracement. So what do we look for? We look for what we call discount zones. You know very well that in smart money, buys are in discount zones and sells are in premium zones. So from here, we look for discount zones. Now we can see our Fibonacci retracement. We can see that discount is around here, and we are finally in our cheap zone, which is discount zone. Now what we're going to do, we're going to wait for the market to come all the way down to this zone, and then we look for internal zones that we're going to minimize our risk from. So don't worry, the way I teach you is the easiest way that you're going to find these things, and they're going to be easy for you. So now this is what is going to happen. Let's play this out and we see. So now we can see that the market has touched our zone. We are not going to just jump into the market, or we are not going to just jump into conclusion that we are going to take a trade, but instead we are going to go to the lower time frames and we see what really is happening in these time frames so that we can see a clear zone to take a trade from. Okay, we shall come from weekly and then we shall go to at least daily. On a daily time frame, this is how the structure really looks like, and this is what the market is showing us. So do we see anything like a change, or anything like a change of character, or anything like a zone? Let's play this out and we see. So we can see some zone here, but we are not yet into conclusion because these zones are still huge zones. So we can't just take a trade from those zones because they are still huge zones. and we want to risk little from those zones. So we go down to the 4-hour time frame and we see if we can see a clear zone on this zone or on this time frame. Okay, on 4-hour chart, we can still see the market is trying to do what we call change of character around here. And if we can monitor this, that's good. And we can see imbalance and we can see equal lows, which means liquidity is around here. So what we can see is that we have a zone here that we can take our trade from, and we have to wait for this liquidity to be taken out. But now this zone might be huge on 4-hour time frame. The only thing that we're going to look for here is to confirm that the market has done something like a change of direction around here. And if we can see this very well, the market is shifting to another direction from the downtrend that it has been creating from the other side. And then now it's going to the higher highs, but still it has left imbalance unfilled and it has left liquidity unswept. Okay, so we still have liquidity here that is not taken yet, and we have to sweep it out so that we can call it a good trade. Now we have to drop down to at least 1 hour to see if we can see a trade from this zone. All right, now to 1 hour, what do we see here again? We see that liquidity not yet taken, and of course we shall play this after when we have seen liquidity taken. So what is this zone worth? And what is this zone taking us? It's taking us something like 41 pips from here to this zone. But remember, a market that drops like this, that means our order block already starts already from this zone. So which means we are risking 46.7 pips, which is not bad it compared to 300 pips. Now we can still mark this zone and we can take a trade from this zone if we want to. So this is 1 hour chart, and this might be a zone that we are starting from in order to take a trade from. Now this zone is not huge like the other zones that we had the other side. We have a change of character, we have imbalance, we have liquidity. So we are going to play this out and we see if really the market would come to this zone and respect the zone. But before that, we have to look for lower time frame analysis again in order to take a trade that is going to be a good convenient trade that is not going to risk a lot. Maybe 40 pips is a lot, maybe something like 15-20 pips. But those ones who can still take a trade from this initial start, it's also fine since you're not risking a lot on this zone. Why would I say this zone is fine? Is because the last break of structure was here before the market could change the direction. So everything we can see here, we can see a break of structure that was the last break of structure on a lower low, and the market failed to break a lower low again from this zone, which means it only swept liquidity and then moved up. So this was a sweep of liquidity alone, and let's mark it as a sweep of liquidity, and then the market moved up, which means the market was no longer interested in breaking the lower lows. Now this is what is going to happen. Let's play this out and we see what happens. Remember, this is 1 hour chart. Now, if we can see well, the market has touched our zone. And those people who want to take the fast trades that are not going to risk a lot of money, by that time, maybe we have minimized to the recent lowest risk. This would be a good zone for them to take a trade. And they are risking some few pips on this zone. And of course, they are focused on the recent high, on the higher high, which means anyone who is going to do top-down analysis, most of them, they're going to do what we call swing trades, which means they're holding trades for long. So we shall be focused on our weekly still. That's good also, but some people want to for that weekly zones, though this would be a better trade that is going to give them a lot of pips. So this is our weekly chart, and then someone is looking for all those pips up to this recent high. Now that's the first entry on this zone someone is going to take. Let's go back to 1 hour so that we can go to other lower time frames, and it's going to be so good so that you can understand this thing.
Trade the markets using funded capital, not your own money. Welcome to Skills FX University, where traders are trained with real structure, real mentorship, and real strategy. When you visit our site today, you get a free trading PDF instantly. Join the Profit Accelerator and unlock access to a $10,000 funded account opportunity. Step into the mastermind and become eligible for a $100,000 funded account. Plus, with our easy installment plan, you can learn while paying and earn while learning. Click the link in bio or description and start your funded trading journey today.
Okay, so let's play this out and we see what the market is really going to give. So the market respects the zone and starts moving up, as you can see. Now, sometimes the market will do something like that and plays around, and again moves. Now, there is something I want you to see. The market is moving in and someone maybe missed this zone. What else do you see here? We see another created zone around here. We see another order block with imbalance. We see another imbalance with order block. And what gives us a chance of maybe thinking of taking this trade around here? First of all, we can see this market moved in and broke structure around here. And let's see if the market really breaks structure above that zone. Good. So this is another confirmation. This is another confirmation that we get that the market is still continuing to the higher highs. And here was a break of structure again on this zone. So this is 1 hour chart. So what else do? We are going to drop to lower time frame. But before we drop to lower time frame, we have got a zone here on a 1 hour chart. Now, what do we see here? We are seeing another zone that is going to give us some good profits. Let's see how many pips we are risking on this zone. Something like 15 pips, only 15 pips. So if we are risking something like 15 pips, let's go down to lower time frame, maybe 15 minutes chart, and we see how the market will play around this zone. Okay, so we have a zone still on 15 minutes chart, and it's having everything that we need. We're having imbalance, we're having liquidity, and we are waiting for the market to fill the imbalance and also take out the liquidity so that we can take a trade. So this zone is having liquidity again around here, and we are having imbalance. So we are waiting for the market to come to this zone. Again, we take a trade from this zone. So we're going to play it out and we see also how this is going to run on our charts. Good. Now the market has touched our zone. And if we took an entry, of course, in this zone, where we focus to, still we are risking some few pips on this zone, something like 14, 15 pips. And we are looking at the recent high, which is the higher high. But also, it doesn't mean that you can't take what we call partials. Like you go on taking partials, few pips. But this time, since you choose maybe to become a swing trader, of course, you're going to look for the weekly recent high. And this is how we minimize the risk. So let's go to the weekly chart and we see how the market is going to play out, and we see what to do with the markets. And that's what the market does. Retests back, but didn't touch our entry zones, the other side where we entered from. And let's play this out and we see. Market creates another order block around here, and of course this order block might react since it is having some little imbalance around here and some liquidity is being created. Those ones who want to take a trade from this zone can still do lower time frame analysis and they take trade from that zone. But for now, we are focused on making our profits above. And boom, all our TPs are now hit. So if this was a recent high and that's where we were focused on getting our last take profit, then all our take profits are hit. So this is how we do lower time frame analysis, which is top-down analysis from the higher time frames to the lower time frames. And some common mistakes that traders do make most of the times, they enter without daily bias. And that's why I told you that on a higher time frame, we are looking for the bias. And also they fight higher time frames. They don't want to go in the direction of the higher time frames. And also they rush trades, because when you rush entries, of course, you end up losing. So when you have clean charts, they create clear decisions. So if this video helped you out, like, subscribe, and comment top down below. In the next video, I'll break down the real life trading using this exact mode like I use every time whenever I'm teaching you guys on YouTube here. Like most of the times I show you the examples and the trades that we took depending on what we are doing. All right, if you enjoyed this video, make sure you do back test, you do more learning, and it will help you out. Thank you. Have a great day and make sure you keep learning.